Welcome to the Cannabis Detector podcast. No sugar, all spice. With the industry BS detector in residence, Kristen Yoder. This episode is part of a special series covering the financial aspects of the cannabis industry.
Hello, my cannabis detectors. It's a new year, 2020. Last year was, as some might call, a bloodbath, and it's unfortunate, but we are going to take this as a lesson to apply to the future. And I have my homie, my wealth advisor friend, Colby McFadden, joining me again, so we can break down what we will be seeing next based on what we've seen in the past and based on everything that's happened so far. So thank you for joining me again today, Colby.
Always excited to be on with you. It's everything you do is so great, so I'm happy to be included.
Thank you. You too, man. It's always good to have candid conversations with people that know things for free instead of having to pay a bunch to figure out these things. So, so we were talking before we started about what we should cover based on a lot of the things that have happened last year. And instead of doing a recap, because we pretty much know what's already happened, starting in the beginning of the year, the darling Canadian cannabis companies at the end of the year are doing the worst. So you just don't know. It's very volatile. So that's what we're going to talk about today. This is not abnormal, right? This is what happens in emerging economies.
Yeah. I mean, this is part of the cycle and the process. The last time we spoke, one of the things that we had talked about is people were getting this sense of FOMO or fear of missing out. It's amazing to me. I just think back to, it was only 6 months ago, I was getting phone calls from people that were so eager to get in and feeling like they're missing out on an opportunity. And now in a very short period of time afterwards, they're looking back, and if they didn't act, they're realizing, hey, you know what? Being patient made a difference. Totally. And if they did act, they're crying. They're wallowing at the moment. They're feeling the other side of these things.
I know a lot of us in the industry have been repeating constantly, it's a long game. It's a long game for all of these venture capitalists that want to purchase cannabis companies, and they end up driving them into the ground because it's not a get-rich-quick scheme whatsoever. It's the opposite. It's a ton of investment and time and dealing with changing regulations. I remember 2 years ago, I spoke to the Las Vegas Medical Marijuana Association, and my presentation was about how the first movers in California would be the first ones out, because there's no way. I mean, when you have an industry like in California where 2/3 of the state isn't even operating in the cannabis industry, you really go from having a bunch of places to sell to on the gray market to getting into having a very limited amount of legal shops, plus taxes, plus the black market, et cetera. So I told people, wait a couple years, and then when everyone starts dying, you can buy their skeletons and you've got turnkey facilities, for pennies on the dollar. It's not a good thing, but it's a fact. And I think we're seeing that play out now.
Yeah, and a lot of people, don't realize that this is a cycle that is common for anything that's new. That first wave of investors and people that are interested is a mix of two things. In this particular case, you did in the first wave have some very passionate, plant-loving individuals that were like, hey, this is our chance to make something happen. But from the finance and banking side, what you have is that first move is typically kind of the greed opportunity seekers. They really don't give a shit about the industry. They're just trying to make some money. And a lot of them being in their 40s and early 50s, they were at the point where they missed the .com era. So they saw this as their opportunity. So, you have situations where in the past where you see these cycles that first wave, the early adopters, A handful of them make some money. A majority of them lose money. And then that next wave comes in, and that's the guys that have been sitting on the sidelines. That's the guys that I've been hearing from that are in New York that for the last year and a half have been saying, yeah, I got money. I could do that. I could get involved, but I'm not sure exactly where or how. And now what they're looking at, they're saying, why would I get involved now when obviously we're within a stone's throw of some very big changes from a legal aspect that could change the whole market. So why would I engage now? Why wouldn't I wait for people to fail and I can pick up things on the cheap? So in that second phase is what you had mentioned, is the people that wait for that opportunity, wait for those failures. They buy things on the cheap and they restructure them. So like as an investor, now's your time that you want to be looking at people who have a track record of turnarounds and restructurings, because then after that, you start to set up the playground for lasting, sustainable businesses. In the tech sector, you can use it as an example that, Apple and Google and Amazon weren't what they were in 1999 and 2000. Now, Apple was around. Nobody really knew much about Amazon. Google wasn't around. But if you look at the last 5 years, those are the three stocks that have made investors the most money. But it had to happen 15, 20 years after that first initial run up and pop of the dot-com era. So I don't think this is much different.
You would think that, well, obviously not, because we have a recession every 10 years or so, right? So you would think people would look at I know a lot of people have compared it to the dot-com bubble, but I mean, especially wealthy people, they should know better, right? Like you would think, but it seems like, well, we were talking about how there's the really wealthy people. Some of them make money. A lot of them lose money, but there's a lot of good people that lose money in the beginning because they wanted to try. And then for the second round, it's a lot harder to find investors because they're like, oh, but that's a shit show. And I saw everyone lose a bunch of money. So like, I don't think so. And that's my other fear, is that the good people that need the investment aren't going to have nearly as much access to getting it as they did before last year, essentially.
Yeah, I think it really depends on where you are in the cannabis market. Like if you look at where the cash flow as of investors has gone the last 2.5, 3 years, it's been all really towards cultivation and retail.
I just don't understand cultivation. I don't get it, because that is the least money-making, most laborious, highest investment up front. Like a ton of infrastructure, and then the numbers go down as more people grow. You have a lower price. This happens in every state that goes legal. I don't understand why people invest in cultivation.
Outside of the license play, the hope that the license becomes more valuable over time, you're right. And but a lot of the early adopters, that's what they were playing, is the license play. And so that's a different play. So, there again, cannabis is like any other sector. You can narrow things down and find places to still make money. We may be talking about, hey, yes, all these MSOs and all the Canadian public companies, everybody who went public too early, they're all getting hammered across the board, and probably not the place that as an investor you want to put a lot of focus on. However, when you start to dig deeper in, scratch the surface, and you start to look at what are the ancillary companies and what are some of the companies that are providing some of the internal supports to all these things, well, there's still some very good investment thesis.
Ancillary is definitely the key, because they're not subject to insane regulations. Yeah, it's an old thing, and niches make riches. And so now as an investor, I think you will see, from a licensing issuance and mergers and acquisitions, you'll still see the most activity in cultivation and retail. But I do think that over the next 2 years, you start to see more and more capital flow to the niches that seem to fill gaps that the industry needs. Before I forget, because there's something else I wanted to talk about, but MedMen is a perfect example of a company that's gone for licenses all over the place. And to me, to do MSO, for people that are listening, that's multi-state operators. To do that, you have way more compliance to deal with. That's a ton of expense. Every single location, every employee, all of the compliance lawyers, it's incredibly expensive. And while everyone was, I mean, not everyone, the investors in MedMen were super hyped up on them. Now they're like losing tons of money everywhere, and they're having to sell and like get rid of things to try and make up for it, get rid of people. So I don't know if getting all of these licenses is worth it if you can't afford to actually put something up, unless they're just getting licenses to sell, which really sucks for the consumers, because now you have licenses that aren't operating. That's one less place supporting the industry. So, I mean, do you think there's money in license stacking in the sense that people just buy them wherever they can? Do you think that's money?
Yeah, there's potential there. That becomes one of those niches, just like in other financial markets. There's people who trade commodities or, and get really niche in what they're operating. License trading, license buying and selling is one of those niche areas that very few do. And that will continue unless there's a regulation change.
I really think it should be changed. I don't think that should be allowed, because everyone loses out when you've got a bunch of greedy people holding on to licenses but not creating the businesses the licenses are for. That's just, that's less tax revenue, that's less supply. I don't think that should be allowed. But of course, why would the states care? They just want money. They really don't care about having operating systems, it seems like. Maybe some states do. California doesn't, obviously.
Well, and they're learning too. This is new to the states, and so they're learning as they go.
Colorado, Washington, Oregon, learn from your people. This is not new anymore. These states could learn from each other, but that seems to not happen. California had speaking with all of the people from the West Coast in Colorado, all the regulators, supposedly to learn all of the issues that they're going to come up against. And then they did all the same fuck-ups the other states did. So why aren't they learning from each other?
Well, for us that live in the real timeline of the real world, 10 years is a long time. You would think 10 years is plenty of time to figure these things out. However, what you have to remember is that governments don't work on the real timeline. They work on the timeline of their own. And 10 years in government time is like 1 year in your and I's life. So, they're just so bureaucratic for a lot of reasons that they have to be, that it'll take 25 years for the governments and regulations to evolve enough to address a lot of these other unintended consequences that get developed when you do regulation.
It's so dumb, because they could be making money, but no, they're going to take their time and spend a ton on enforcement. But anyways, I'm getting off track. The other thing I wanted to talk to you about is the management switchover. So we're in a new cycle. A lot of these companies don't have their executives in place anymore, like Canopy. MedMen has had several turnovers of executives. And we had been talking about, now we're going from the people setting these up, now we need people to come in and fix everything and make them continue to work. Yeah,
and this is part of that cycle we talked about just a few minutes ago, is that in that first phase, what you need to raise capital and build a business is a different personality. So, we've already seen in that first wave, there were some very notable personalities of a lot of these companies that are now no longer as at the forefront, right? They've transitioned out or gotten fired or whatever it may be. And so you have to remember that in that early stage of capital raising and building, it's a different type of CEO. It's a different type of person that's attracted to doing those things, as opposed to somebody who's more of an operational CEO. So I do think that you start to see over time that the management is going to change from these more flashy deal maker type of guys, bankers backgrounds, to operational backgrounds and people who have experience in turnarounds and things of this nature. And as an investor, that's what you would want to look for is as you're looking at the management team of a company that you're investing in, you want to see more of that at this stage. People who have operational backgrounds and execution backgrounds as opposed to banking and capital raising backgrounds.
And that ties back to what you had said a couple episodes before, as is the inside, so is the outside. So if your insides are, run incorrectly, it will show on the outside. I think, right, that's what you meant, right? Because I see that.
Yeah. I mean, here listen, your banking, capital raising deal guy is going to look, dress, and talk differently, on the outside, and he's going to operate more differently on the inside. They're going to be a little more ADD. They're going to be faster talking. They're going to be bouncing around a little bit more, so you're going to see that both internally and externally, and that's going to affect the business. Typically, people in that realm aren't going to be as organized. They're not going to be as together on their spending because, one thing we had talked about too is, if you want to know how a CEO is going to manage a pocketbook, well, take them out drinking. And because people tend to handle alcohol and other substances very similar to how they handle money.
That's so true.
Now what you want to do is look at you'll know the difference between an operational kind of guy or person as opposed to a salesperson, because the operational person is going to be definitely more conservative from look, feel, touch, and more organized, probably slower speech patterns, more thoughtful execution.
I'm an operations person for sure.
Yeah.
That's my blood.
So that's,
the operations people got to keep the CEO in check,
Mm-hmm.
And I think this is the other thing that we saw from last year is I think these companies are starting to understand that you should have some cannabis people in your company. You don't know the industry as well as you thought you did just because you made money off of other types of commodities. It's a different ballgame. And I'm hoping this year people from the cannabis industry actually make some money, because they're recognized as being integral to the industry instead of, the criminals who were breaking the law before anything got started.
Yeah, well, it was interesting, as I was working with Green Flower and we were working on an enterprise sales type of product, what was interesting to see the transition over the last 2 years is the mix within an organization that went because I would always ask the question, how many people in your organization came from cannabis? And 2 years ago, in asking that question, it was highly concentrated cannabis-related knowledge and people. And in the last year, that really changed. And as I was talking to recruiters and people who are staffing in the industry, the demand for them to go look outside of the industry as everybody was growing really started to expand. And now I'm seeing a little bit of a little pullback in that as well, where there's this more equal balance between people who are from outside of the industry and have a little bit of cannabis experience.
I definitely think that's necessary because cannabis people didn't have formal business experiences necessarily. So it's a mix of the two. You just can't be one-sided either way, I don't think.
No, it's true. It's true. You got to, and what seems to be when you look at these companies and the makeup, the founders and the salespeople seem to be the ones that have cannabis background, and then everybody else has been hired from outside of the industry, which makes sense.
I don't know. I got to tell you, this year I'm going to start attacking companies that use sativa indica on their packaging, and I'm blaming it on marketing departments. So I really want to, I mean, a goal of mine is to educate marketing departments because I can teach consumers about terpenes. It doesn't matter if everywhere they go, no one knows about terpenes, or you don't have any way to know what terpenes are in anything, then we got to start from the top down. So I think, I know a lot of Canadian companies hire people from the alcohol industry for sales, and that's a terrible idea. It is not the same. It is not the same culture. It is not the same way you can advertise. It's none of that. And I feel like if anyone should be educated, marketing really needs to get on it, because they're denying science for fluff bullshit, and it's just not acceptable.
Well, that's your new niche.
That's another thing,
Yeah. That's your new niche. Those are the people to go after. That's what you have to assume that it can and probably will happen, in the sense that as companies grow and they hire more people from the CPG space, consumer products, goods, and other industries, what most people do is they come in and they just apply the same tools and skills that they had from the previous. It's not like people step into things and become creative and creating a whole new system. They usually just bring what they had and implement it there and see if it works.
Yeah.
And I would imagine as that process happens, you'll start to see some misguidance in the marketing and towards the consumer.
Yeah. So
and not purposely, but people have to remember, enterprises and corporations, they're not your friends.
Nope.
It's like if you want quality food, you don't buy it from Nabisco. All right. I mean, just because they have shelf space doesn't mean that it's a good product. And we know that. I mean, we know that people nowadays understand that there's a very big difference in the quality of food. And the bigger the name or the larger the corporation, pretty much the crappier the product is.
Yeah, that's the less quality control.
Yeah, and that won't be any different in cannabis. No. When Altria and British Tobacco and when they're popping this stuff out like cigarette factories, that's not going to be where the quality is. And I'm not saying anything anybody doesn't already know, but it is what it is. And that's why somebody like you is going to have to be really at the forefront of educating the company, because there will be mid-level companies and smaller companies that will be able to differentiate themselves like they do now in other industries.
Yeah, like craft beer. The key is when one of these massive conglomerates go to purchase you, you don't sell your soul along with it. I know several companies that have been approached by Acreage, and I mean, look, we've spoke about this before. We can't hate on people selling out when they've busted their ass and have been poor and suffering for years and years. The key to business is a successful exit, and other good things for people, but whatever. But I think that's an important thing for people to consider, is even the craft people. I mean, they're the ones who suffer the most, because they put the most time in and they need to make more money, but people aren't necessarily willing to pay more money. So if these companies get picked up, you just have to maintain integrity in your supply chain as much as you can, because there is a market for craft. It might be a smaller one, but no one wants to see us go to what apples, how apples changed from like 1 billion different kinds down to 5 different flavors, because they're the easiest to grow and the most consistent, which I think happens with all agricultural commodities.
Yeah.
Well,
absolutely.
we are about to run out of time. Is there anything else you want to talk about?
Yeah, you know what? Let's just wrap it up with giving everybody some actionable things they can do if they were saying, hey, great, I hear what you're talking about and I get it, but how do I turn this into money? How can I benefit personally from some of these things? Because, last time you and I spoke, all the stocks were at highs, valuations were at highs. Since then, everything's been cut in half. Private companies have a more difficult time raising capital. So, as an investor, you always have a choice. Do I invest in a private company or do I look for the public companies? Most of the time, people go for the private deals because if they can if they can assume the risk. If they're accredited and they're able to afford the personal risk, typically they're going to go for private deals because the upside is grander. People want that multiple expansion. But what's interesting with the bloodshed that's happened, you might be able to get equal or comparable returns in the public markets now. Now, you got to pick and choose. I don't think the public markets and the stocks related are done going down. I think before you really hit a bottom here, you got to have a couple of high-level, high-profile failures. The tricky part, I don't know how that works in cannabis, right? Because if you can't go bankrupt, you go into receivership, and I'm sure there's a lot of conversation going on behind backroom doors at a lot of the early private equity companies about this. But my point being is, as an investor right now, I would look at private deals and only get involved in a private deal if it was very niche-y and served a very unique space. And other than that, I would focus on investing in more of the public sector because I could manage my risk better and I've got liquidity. And there will be some names that come out of this as winners. And so if you can pick up some stocks that are, $2-3 and they make runs higher, there might be an opportunity here. I mean, like right now, investing is one of those funny things that when the market goes on sale, it's the only department store people will want to leave. If Nordstrom's puts on a half-yearly sale, everybody wants to show up. But, if the stock market goes on sale or stocks themselves, people get scared, they run away, they want to embrace the decline that's happened and use it as a way to start to build a portfolio.
Yeah, I mean, what is it? Buy low, sell high. Obviously, Canopy and Aurora, well, I don't know, obviously, but I don't think anyone's going to let them fail. I think that especially their investors, the larger ones, are going to make sure that they put people in there that can turn things around, like we were talking about. So it's funny because last year, Afria was being short sold because supposedly they lied about a bunch of things. But I was just looking up on them, and now all these investor websites are saying Afria is the winning stock in Canada, which is it just goes to show you it's so volatile. So yeah, I mean, maybe this is the time when normal people can get in, but strap in for a long ride. Like, this is not going to be short. And I think that for me, it's so stressful to see like a stock being worth so much and then watching it fall and feeling like, oh my God, I had all this money. And then, but you didn't, you never had it because that's not even reality. It was like Tilray when they went public, insane valuation, but it wasn't based on reality. It was based on the emotions of the market. So yeah, it'll be interesting to see.
Yeah, and the biggest mistake people make is position sizing, and what that is if you have $10,000 to invest, the mistake most people make is they think they have one shot. Like, oh, okay, I'm going to put it all to work right now, and that's not how you do things. Is what you want to do, and how you do it in a way so that way you're not buying at the high. Is you be willing to take some time and play the long ball and dollar cost average in. Like if you have a name or a couple of names that you've researched out and you feel they're the right fit for you, okay, hey, and you've got $10,000 to put to work, okay, start off with $1,000 and then babysit it for a while and then buy some more and then build the position over time. And you do the same thing on the exit. You should never be so hubris to think that your timing of that one moment is the perfect bottom or perfect top, because it never is.
Yeah. Hindsight is 2020, but wait, this year is 2020. What does that mean? Just kidding.
It means that we're either going to have a really good year or a really bad year, probably nothing in between.
Yeah. Oh God, for sure. I just remembered it's an election year. So strapping in for a wild ride. Yeah, for sure.
It'll be fun.
All right. Well, if you want to find Colby McFadden, he's on LinkedIn, or you can reach out to me and I can connect you with him, but he's pretty easy to find. Is there anything else you'd like to say before we sign off?
No, hey, I just appreciate being involved, and let me know if there's any help I can ever give you.
Yeah, thank you so much for joining us. And thank you, everyone, for sticking with me. This year, I'm going to have a lot more episodes. I'm super excited. So stay tuned and have a good day. Thank you.
Thank you.
If you've enjoyed this episode, please be sure to subscribe and leave a review on your favorite podcast host. It really helps us get the truth out to a larger audience. You can follow us on Instagram at cannabis.pod and on LinkedIn at the Cannabis Detector. Show notes and links to articles referenced in this episode are available on our website, cannabispod.com. Is there a topic you want to hear, or do you have some BS you'd like to tell our audience? Send us a message on Instagram at cannabispod. Stay skeptical.